YouTube, what's going on? It's your boy, Dr. Carlton Calhoun, creator of the Day Job Killer Strategy and Community, where we teach people how to multiply their money from home using investing, trading, and e-commerce strategies. Before I get into this video, do me a favor. Like this content, subscribe to the channel, and let me know what you think about our content. Now let's get into the video. Today we're going to talk about why so many of you are failing miserably in your trading. And it has nothing to do with what you might think it is. So let's go ahead and get into it. I made a little presentation today just to make sure that I stay on track, because I promise you this will not be a long video. The first reason why so many people are failing in trading is because they lack the proper education. Let's face it. If YouTube was the only place that you needed to be to learn this skill, you would probably already be successful. And I get it, I've done it too. I binge watch videos. I look for every piece of content or shortcut that I can find to give me that magic trick that's gonna help me become a successful trader. In fact, I did that for about 2 years. You know what I did? I enrolled in a program that specialized in teaching trading. Now, some of you tend to allow yourself to get bullied by comments on YouTube. Look, this is nothing against anybody, but if you're basing your decision to get started in a course or a program based on what people say in the comments, that's probably why you continue to fail. I learned a long time ago, if you're willing to buy somebody's opinions, you have to be willing to buy their results. A lot of these people you see in the comments, no disrespect, but they don't have the results that you desire. So you need to enroll in a course, a program, or pay for mentorship, and that's going to help you tremendously in terms of cutting down the time that you spend learning the skill and the money that it's going to cost you. I tell people all the time, you're either gonna pay up front or you're gonna pay on the back end through blown accounts. I've done both. That's why I just made the decision to follow people who had the results that I want and just take the classes. You're going to save yourself so much time. And stop reading comments on YouTube. I will never call somebody's program a scam. That's not my decision. That's not up to me. There are tons of good courses out there. And some of the courses come from the people who are on YouTube. So do your research, do your due diligence. If it's a MLM that teaches trading, don't listen to what the naysayers say. Instead of listening to people with no results, listen to people who have the results. If it's a course, instead of listening to the people who didn't take the course or who didn't complete the course, listen to people who completed it. Stop reading comments on YouTube and allowing that to influence the decision that you make. Remember, at the end of the day, you are the one who get the results. So find somebody who has the results that you desire and do what they say. It's that simple. This is the second reason why people fail. They lack commitment. You are not going to be successful in 30 days, in 60 days, in 90 days. And again, let's be transparent. A lot of you just want trade signals. That's why you keep failing. You'll enroll in a program that gives you trade signals. As soon as you take a loss, you call it a scam or you quit. Nobody is going to win 100% of their trades. Nobody. That's just the way it is. If somebody were to win 100%, then they would just bet everything that they have in the markets. But people realize, especially professionals, that you're going to lose. Stop looking for the easy way. Stop looking for the shortcut. Is it get rich quick? Absolutely not. But then again, it is, because you will get rich quicker learning a skill like trading than you will at a job. Why? Because you'll never get rich at a job. If it takes you 10 years to master this skill, that's still faster than you would have accomplished it by working a job. But you have to give yourself time to succeed. It is unrealistic to think that you're going to master a skill like trading in 30 days, in 60 days, in 90 days, in 6 months. I've been trading now almost 2 years. I've blown numerous accounts, but I didn't quit because I knew that it worked. So I stuck with it. And I look at all of the blown accounts, all of the lost income, not income, excuse me, all of the lost investments as education. See, I have a PhD in education, over $168,000 worth of student loans that I had. But we continuously teach people that that's the way to go when it comes to getting ahead financially. We encourage people to pay money to go to school, but we don't encourage people to pay money to learn a skill like trading. Come on. You have to be committed in anything that you do. So if this is something that you want to do, that you want to earn a living off of, you have to be willing to put in the time. Statistically, you won't be able to make a living off of this skill set in your first or second year. That's just the statistics. Not saying it won't happen for you, but statistically, the odds aren't in your favor. Put in the time, put in the dedication, put in the chart time, the education, the training. Make a commitment that this is something that you want to do, and then you'll start to see the results. Third reason, probably the biggest, and this reason encompasses the first two, you're just undisciplined. Over leveraged, over trading, all of these things are discipline. One thing that I learned through trading, every challenge, every inadequacy that you experience in your life, you're going to experience in trading. And the funny thing about it, and this is with success in general, until you learn the lesson, you'll continue to receive it. So you keep blowing accounts. Why? Because you're over leveraging, you're over trading, you're impatient, you rush to get in or out of a trade. See, in the beginning, you're not used to your account going in red. But as you become experienced, as you become seasoned with this skill, you understand that 9 out of 10 times, your account will go into drawdown before it goes into profit. So if you're trading properly, you're not concerned about that because you know that it's just part of the process. Another area of lack of discipline, you tend to overtrade. You're trading too many positions. Why are you trading so many positions? Why are you trading so many pairs? Why are you just trading so much? You don't have to do that. Ladies and gentlemen, if you trade properly, for instance, I do a Sunday setup and I talk about trading properly. I give about 10 to 12 setups every Sunday. In fact, there's some videos on YouTube. I tell people on the Sunday setups, these are not for you to take every trade. These are for you to wait for one, to meet your criteria, to provide you with the proper confirmations, and then you take that trade. No, don't take all 10 to 12 trades. That's a lack of discipline. Also, another lack of discipline. Every time you see somebody on YouTube flashing money, you want to go do what they do. Every time you see somebody on YouTube with a big account, you want to go do what they do. That's lack of discipline. See, what they're not saying on YouTube and what I'm not afraid to say is that they don't tell you how much money they lost. They don't tell you how many accounts they blew. They don't tell you what their trading account size is. And even if they do have a large account size, they didn't tell you how many years it took them to be able to do that. See, I understand that being a more seasoned person, having gone through so many different experiences in life, I know not to chase shiny things. So I'm not swayed or persuaded when I see somebody flash money or cars or nice homes, because I know that it took time to get that. I understand the process, and you have to be willing to go through the process. Some of you are under trading. You're afraid to lose money and wondering why you aren't making money. I teach people in our community all of the time, never trade with money you aren't afraid to lose. There are always risks in investments. There are always risks in starting a business. If you are afraid to lose the money, you shouldn't be trading. That's just something that you need to understand. And then most people, especially in the beginning, they tend to over leverage. You can over leverage by trading too many positions. You can over leverage by trading too many pairs. You can over leverage by just taking too many trades. So when we talk about over leveraging, most people don't understand proper risk management. We all know, at least every guru or expert tells you you should not be trading more than 3 to 5% of your account at any given time. We understand that because we hear so much. But a lot of us don't know how to calculate this. Also, most people are trading to make money instead of to make a return on their investment. I teach people to trade for a percentage gain, not a dollar amount. It's a different mindset. And I always have them compare it to a savings account. You take $100, you put it into a savings account. You take $100, you put it into a trading account. Let's say in that trading account, over the course of the month, you grow that account 5 to 10%. See, the average person says, that's not a lot of money. Well, yes, it is. Think about your savings account. How much money did that savings account make you in 30 days? In fact, how much money did that savings account make you in a year? A good savings account will pay you about 1%. If you have a money market account, it might pay you 2 to 3%. Here in trading, with the proper education, with the proper discipline, with the proper mindset, you understand that this is a long game, not a short game. So you understand that 3%, 5%, 10% is a significant return, especially when in stocks, the S&P grows about 8% historically. See, when you think about it as investing, you start to understand the long game in terms of trading. Another thing that I teach people is once you reach your percentage for the day, win or lose, stop trading. Now, if you're winning the trade, we teach people to move the stop loss. That secures your return on investment for the day, and the rest is just profit. And you continuously trail your stop loss. But if you hit your percentage for the day on the losing side, which we call lessons, then you need to stop. And here's something that I want to teach people when it comes to proper risk management. It's a combination of the proper mindset and the proper lot size. See, a lot of people don't understand how to calculate stop losses or lot sizes. They think the lot size is based on your account balance. Well, in a way it is, but not really. See, once you develop the proper way to trade, which I teach people to trade for at least a 1 to 3 risk to reward. Personally, I trade 1 to 5, between 1 to 5 and 1 to 7. That means for every dollar that I'm willing to lose, I'll make $7. When you trade like that, you understand you don't have to win every trade to become profitable. So I at least trade 1 to 3. So let's talk about how to calculate lot size and risk. So your risk amount is based on the percentage times your balance divided by 100. And then your lot size is based on the risk amount, which we'll show you how to calculate, divided by your desired stop loss times 10. Now, if you're a seasoned trader, you know how to calculate this without going through all of this mathematics. And if you have a challenge with this, leave some comments. I'll be glad to go over it with you. But these are very simple formulas that you can apply. And here's how it looks. Let's say that you have an account size that's $200. And then you know to risk 3% of your account balance. And you want to have a very tight stop loss, let's say 10 pips. Well, remember the equation. The risk percentage times your balance over 100 is the amount that you should be risking. Now, again, if you understand this, you know that this is just $6. But for the people who may be new and don't know how to understand this, let's go through it. So your risk percentage is 3. So in the formula, we put a 3. Then we multiply that by our account balance, which is 200. 3 times 200 is 600. We divide that by 100. Our risk amount is $6. Now, if you're trading binary options, you know you can just enter $6 as the risk amount because it's fixed risk, fixed reward. That's why I love binary options. But anyway, so our risk amount is $6. Let's determine our lot size based on the risk amount and based on our pip count, our desired stop loss in terms of pips. So we take the risk amount, which is $6. We divide that by our desired stop loss times 10. So basically 6 divided by 100, we get 0.06. So our lot size on a trade with a 10 pip stop loss should be 0.06. That's how you calculate and exercise proper risk management. Let's look at another example. Same account size, same risk amount, but this time we want to stretch our stop loss a little more. We want to give the trade room to breathe, as we call it. We use the same formula. The risk amount, which is $6, divided by our desired stop loss times 10. So now we're dividing $6 by 200. That same account balance, maybe that same pair with a wider stop loss, we know to move our lot size down to a 0.03. Ladies and gentlemen, that's how you calculate and exercise proper risk management. So as I close out this video, let's talk about some keys to success. Number one, you need to be disciplined. I like to tell people that discipline is freedom. And we have a saying in our community, the Day Job Killer community, discipline over profit. If you exercise proper discipline, it's only a matter of time before you see consistent profits. Also, you want to plug in, whether it be a course, whether it be an educational platform, whether it be mentorship, you need to plug into an environment that's going to give you the proper education to help you become successful. Third, it is so important that you indulge and participate in personal growth and self-development. There is no way around that. If the person you are would allow you to get the results that you desire, you would already have them. Ladies and gentlemen, please participate. Attend some seminars, read some books, listen to the personal growth and self-development audio. Take the music out of your ear for a while, because your thoughts create things in your life. And if you don't have the things that you desire, it's time for you to start thinking a different way. The only way you're going to start thinking a different way, you need to start hearing some different information. Stop listening to yourself. Stop listening to people who don't have the results that you desire. Stop reading negative comments in YouTube. Don't allow yourself to be bullied by negativity. Surround yourself with positive people. Participate in an environment and a program that promotes and encourages growth and success in every area of your life. And it's only a matter of time before you start to experience it. And last but certainly not least, commit. Give yourself time to succeed. No matter what age you are, it took you that many years to be that age. So for a lot of us, myself included, there's a lot of negative programming that we had growing up. So we have to give ourselves time to succeed and overcome the negative programming that we had. And it's okay. I've been there. Many people have been there. If you want different, you have to choose to be different. With that being said, my name is Dr. Carlton Calhoun. I appreciate your time, energy, and attention. And hey, if you like the video, do me a favor, click the bell, subscribe to the channel, and let me know if you like this content or what type of content you'd like to see. So again, this is Dr. Carlton Calhoun signing off. Hope you guys have a wonderful, wonderful day.